previously on Stay in Your Lane.
Cash flow is better than it used to be. And that helps sustain folks longer, even if they're losing money in the long run or on those individual loads. As things normalize, and that means getting a little bit better in the
Mhm.
freight economy, a little bit better. I still think you are going to see some failures. And I
Yeah.
think you're going to see some supply go away, even in the face of slightly better market.
The clawback has been painful, and the repercussions from that might be felt more so in the next 12 months.
One of the other things that happened in this cycle was private fleet growth went up for the first time. And that was I have to be honest with you, I think it was a bit of a knee-jerk reaction to the very high rates that we saw during the height of the boom in the pandemic for freight. And so you had some shippers that had a fleet that said, why don't we do, I mean, at these prices, why don't we just grow our own fleet? And then what happened? Rates went down, and then they're like, and then some of those private fleets grew to a point where you go from, those private fleets have their drivers on the best lanes and the best routes. And then you grow enough that you have to expand beyond that. And now driver issues, keeping drivers, retaining drivers, getting new drivers starts to become a bigger challenge than you did when you were a smaller private fleet. And so I do think, though, that one of the reasons why the for-hire market hasn't rebounded a little bit more than it has is because we did see private fleet growth for the first time in a while,
Right.
right?
And you
And
saw
and
acquisitions happen,
yeah, oh yeah.
which, wasn't really the thing for the past couple of years. You didn't see a lot of it. The bigger
So yeah,
players.
yeah, I think, some of these conditions are going to work themselves out as we go through this year.
All right. So, what are the tea leaves telling you? How long till we start to feel uh, some type of a capacity crunch and economy uptick from over there in the big guy seat?
Well, again, I am getting a little bit more optimistic, but not like super excited. So I think as we go through this year, you know, second quarter in general should be a little bit better than the first. Third quarter should be a little bit better than the second. And by the time we get to the end of the year, hopefully we'll be like, okay, things have definitely improved. They're better. You know, a lot of people look at year over year changes and whether it's volumes and rates and so forth. I do think when I'm looking at the economy or I'm looking at transportation and trucking specifically, in times of inflection, when we're looking for things to change, I really don't. It's not that I don't look at the year over year. I put a little bit more stock in the sequential changes.
Yep.
And if you do that, things have definitely improved and I think are going to continue to go. The problem is we fell in a big hole and then we're sort of clawing out of it and we're not springboarding out of it, right? We're clawing our way out of it. And so it's just going to take time.
Yep. So, what's your prediction on time? I'm putting you on the spot.
I think this spring freight season should be definitely feel better.
All right. I'll take
Again,
that.
with the caveat of we want to see what goes on with tariffs and that sort of thing.
No, I would agree. I think we'll see some positive start to rear up in second quarter. We'll feel a little more of it in third quarter, and maybe it'll plateau through the fourth. But I think from what my perspective is, what I see is 25 is going to be our transition year. 26 is going to be a little better. Would be my hope.
Yeah, I think I generally agree with that. I want to see what goes on with some of these policy potential changes that could impact that. Putting those aside, I agree. I agree. I think that we're headed down that path.
You see anything change on new drivers entering the market? Because I know we have a high turnover rate in the into the industry, and right back
Yeah.
into the industry.
It's funny, the turnover rate, it's still high relative to other industries, although there are some industries that have high turnover rates as well. With that said, we're around, and I know this sounds high, but we're around 75% annualized turnover in the truckload, for hire truckload market. There was a day, you know, 20 years ago, 15, 20 years ago, when it was very common for the average for the industry, not some individual fleets, which, still have some very high turnover rates, but the industry had well north of 100%
Yep.
annualized turnover and even north of 125% for some years.
Yep.
So I do think fleets have figured out we have to talk, it costs us money when we lose drivers. So we have to figure out how we can retain the drivers we want to. Now, some of that turnover is fleets, getting rid of drivers because of driving, the way they drive and those sorts of things. Inability, some folks with a drug test and so forth. So some of that turnover is they want, but the vast majority they don't. And they figured out, okay, we have to put more into retaining our talent. With that said, as the driver market, and I would fully expect the driver market to move slowly in the direction of getting tighter and tighter as we go through this year,
You'll start to see more turnover again.
you potentially, I call that the free agency of trucking, right? That if you are a driver that has a good driving record and you can pass a drug test, you can change carriers whenever you want,
Right. You
right?
can drive whatever you want for whoever it is.
Exactly. And that's great for the drivers,
Right.
right? But it means then fleets have to start doing stuff to retain that talent
That
that they
talent
want to keep.
makes perfect sense.
Yeah.
So, the ATA's been fortunate to retain your talent for all these years. We are fortunate to have you on our podcast and on our show on a regular basis, Bob. I can't thank you enough. Always appreciate it. Is there anything you want to leave our viewers with before we let you go?
Again, I think it's been frustratingly slow. It's been for me this recovery. But we're seeing in the data, we're seeing some improvement. And I say, hang in there. I think there's going to be some more reduction of capacity. I think there's going to be, at the same time, a little bit of expansion in demand. And I think by the time we get through the first couple of quarters, things are going to start to feel better out there.
Well, thank you for sharing that with us. Thanks for talking to all of our viewers. Thanks for being on Stay in Your Lane again. And looking forward to a very enjoyable 2025 with you. To everybody there, we appreciate them.
Well,
And until next time, stay in your lane.